Yeah, that's right. Yeah, so I've got some notes prepared for us if we can switch screens here, perhaps. I just want to go
Yeah.
through a few of the things to look out for today and what might happen, what might not happen, what the implications are for, there we go. What the implications are for the various markets that we're trading in, including gold and stocks and other commodities, Forex, etc., and crypto, of course. So I want to go through this very quickly as just as a sort of a starter. I'll read through it or skim through it, and then we can talk about a little bit more and go to the charts. So the Federal Reserve FOMC meeting looms. Welcome to everyone in the chat, by the way. I can't see who's here, but I'm hoping that everyone's here. Welcome to you, if you're here, to the members only group. Welcome to everyone, and Paul. It's great to have everyone in here. There's a lot to talk about today, so we're going to cut through some of the niceties. Let's read through some of the stuff. We'll get to the niceties later, perhaps. The markets are pricing in a 25 basis point cut, right? So we see on the CME price Fed Watch tool that's about an 87% chance of a 25% basis point cut, which is kind of baked in. I think that's kind of anything above 80%, you'd expect there to be a cut no matter what. Most of the time, it's a very strong indicator. But here's the catch. It might be a hawkish cut, but with a signal that further easing may be more limited or slower than hoped. And that will come out in the presser afterwards when Jerome Powell speaks to the press, gives his speech and answers questions. And if he decides to take a hawkish tone, in other words, if he says we're going to cut rates now, but don't expect any further cuts early next year, and not that he'll have any say in it, really, probably. And this might be his last opportunity to do something. And maybe he's going to be really nasty and there won't be a rate cut at all. I don't think that's likely. I think
I think what you just said, I think is probably going to be it.
Yeah.
Is so, out your kiss.
Yeah. We do know that there's no love lost between him and Donald Trump, both ways. And it might be his last chance to dig the knife in a bit. I think digging the knife in with no rate cut might be a little bit too jeopardizing for him personally. So I don't think that's going to happen. So if we do get a rate cut, and I think we will, what is the various interpretations? If you look at it from a bullish perspective, cheaper borrowing, stronger earnings potential, leveraged sectors, etc., increasing. But the bearish interpretation, if there is a bearish cut, as we said, if the Fed signals restraint or sees inflation still sticky. I hope you can read this. Is it big enough on the screen there, Paul?
Yeah, I think so. Unless someone's using
maybe I can zoom in a wee bit. Yeah, no, I'll just zoom in a little bit like that. Okay, so the bearish interpretation is if the Fed does signal restraint and says we're going to cut now, but don't expect any further presence after Christmas. And if inflation is still sticky, which it's likely to be actually, the end of easing narrative could spook risk assets and raise concerns. Notice that global yields and FX are moving too. The yen weakening on US interest differential. There's all the talk about the carry trade with the dollar yen being very, very overvalued, and whether that money will start to flow back into the yen. And that will also put pressure on global markets if that happens. There's no sign of that yet. If we'll have a look at the charts shortly, the yen is actually getting weaker by the day, in line with what we thought would probably happen with the dovish new Prime Minister of Japan. So let's have a look at point number 2. Investment center is improving, but with caveats. So this supports the sort of bullish interpretation. And I'm not going to read through all of this, but you can read through it. And I have put this up in the private group already. So if you're a private group member, you've already got access to this document. Risk appetite is pretty high. 8 of the 11 sectors are showing bullishness. That's healthcare, financials, communication services leading, and tech and utilities, industrials less favored, and so on and so on. Just to save time, I'm not going to read every single word. Is the Magnificent Seven under pressure? The bullish idea is that adjacent tech and subscale companies, chip design, are the foundations for AI rather than just only the mega cap winners. That'll be a bullish scenario for the market in general. But complacent large cap tech stocks where growth expectations may be baked in or overstretched. So getting stretched to the top end. What about commodities, precious metals, etc.? Precious metals, silver's broke above $60 an ounce. I made a comment on X yesterday actually saying back at the beginning of the year in January, when we were trading at about $28 on silver. I made a prediction, or not a prediction because I don't do that, but a sort of projection rather. It's a euphemistic way to say prediction. A projection.
I do all the time. I was doing a video just the other day, and it literally said on the chart predictive, and then I said, no, it's not a prediction, right? It's this horrible language we have to use.
Yeah, exactly. Yeah, so we don't try and predict the markets, but we do draw scenarios and projections where things could move. And I was saying we would get to 50, 55, and then 60 by the end of the year, and we have done that. So I'm pretty pleased about that. In fact, when I put that up on X on YouTube in January this year, I got a lot of flack, a lot of bad comments aimed my way because of this prediction, if you want. Anyway, we're there now, $60 an ounce. Very dramatic rally. We're long on silver. We've been long on silver the whole way from $50. And this is bullish for precious metals, industrial commodities, etc. But it could be bearish for discount-sensitive assets if inflation falls faster than expected and yields rise, and so on and so on. Quite a complex story. And then we've got sectoral rotation as well. Financials might benefit from rate cuts, and we'll look at some of the names that we could be trading as well. Healthcare, defensive, but also innovative. And then bearish for sectors with stretched valuations. If we see a cut, a bearish cut, negative comments by Powell, we could see pressure on some of these other sectors like real estate. And real estate is the only one that's mentioned here. Anyway, so it's a key decision today. Let's have a look at what could rally. We talked about financials. Look at names like JP Morgan. I don't trade these names, but if you're interested in these sectors, you might be looking at JPM, United Healthcare, NVIDIA, still structurally strong, but shorter term skepticism, fading dips, and precious metals in general. There's a name, for example, new metals. And then bearish. If there is a bearish sentiment that comes out of this FOMC meeting, then the stocks that may struggle, and we're long on some of these, Tesla, consumer discretionary, mega cap tech, high beta value and valuation, and sentiment fatigue. I'm not sure if that's the case. I think actually Tesla is one of my favorites, but this stuff comes from various stuff on X. This is gleaned from posts on X by Grok and ChatGPT. So sensitive to real rates if the Fed tone is hawkish. These are names like Tesla. Property groups might be under pressure if real estate. If interest rates aren't likely to come down quickly and much further, real estate will be under further pressure. Intel, lagging AI adoption. Apple. I see Apple's listed as a good one here, but
No.
So Apple, I don't believe this either. Hawkish. I think, talking about innovation and underperformance and stuff like that, Apple's one of those, I think. I wouldn't touch that one right now. PayPal. So some of the names you can look at. Read through all of this in the private group. Tesla, we talked about. Commodities, precious metals, natural gas. A bit of an interesting situation going on. Is weather cooling or is it going to heat up? It looks now like we're going to see warmer weather into January and then colder weather, which means that we may see natural gas moving further down from these very high levels and then picking up pace again early next year, which is kind of the scenario which I sort of envisaged right from the beginning. And some of these people agree. We'll look at this in a minute. And then I've also got some natural gas curves on here, which we'll come back to. And the most important one I want to talk about is heating degree days. Not much going on, pretty mild. And these models change all the time. So, I don't put a lot of emphasis on this. I'd rather look at the charts. A warm lead up into Christmas and then a cold January, February, maybe. That's the way the models look at the moment. A couple of other models look similar. And it doesn't look pretty, very hot or very cold in general over most of the US. A little bit of a low pressure in the middle there, but lots of warm weather seeping in from the left-hand side. And you can see that big warm front coming in as well. So lots of info there on natural gas, but I think the best thing is to look at the charts. But I wanted to draw this scenario for you saying that we've got this FOMC. It's probably going to be a rate cut, but it could be, and I think if Paul and I are correct, it's probably going to be a bearish cut, which means that the markets might struggle. However, having said that, JP is not going to be around for much longer, so he might not have the influence.
The thing is, look, I think I would be shocked if there wasn't a rate cut, right? Based on everything we've had from the rest of the board and the governors. I think the problem is, right, it's like we've got the fallout still ongoing from the government shutdown, and there's a data blackout, which regardless of whether whatever you perceive of Powell's intentions or otherwise, right? He has got one hand behind his back simply because we're not up to date on the data yet, and that inherently is going to impact a decision regardless of presumption. And I think this is the problem. And then of course we look at how markets are going to respond to this. We've also got the context, as you're saying, that there's no more Powell most likely after this, right? I mean, it's almost guaranteed, right? So, and what does that look like? Because that then goes into the conversation about some of the concerns, legitimate or otherwise, about the government having their finger on the scales a little bit when it comes to data points, and then therefore the reactions to those data points, right? And that may be a little bit controversial, but I think it's a political reality which we may be walking into, and we don't need to be concerned with that, other than the fact that it's going to have a confusing impact on the markets. And what does that look like? Who's it going to be? We think we know who it's going to be. You know, what's that going to do? Are they just going to do crazy things? Are they just going to do whatever they want, which is going to be unhelpful? It's a lot of stuff going on, and this is why when we talk about this year, and we talk about like crypto, and we talk about how it's been muted, arguably, right? It's all to do with, of course, you still need to, you can have the best seeds, you can have the best farming equipment, right? But if the weather sucks, you're going to have a bad crop, right? No matter what you do. And I think this is the situation which we're facing. I think markets just want to be free of it. We just want to be free of it and open the sails up and point ourselves in a direction and know we're going to arrive in the right place, right? And that's what we're looking to see. So I think your breakdown is very insightful. And I think it's going to be very interesting to see how the markets react. I mean, are you expecting some whipsaw kind of all over the place, or you think it's going to be a little bit more sedate?
Paul, I don't know. I'm just looking at I'm looking at these markets. I've been sort of transfixed on them the whole morning, and they're not doing a lot. Actually, they look rather calm to me, and I don't think we're going to. There's a sort of a sense, if you've been trading for a very long time, like I have, you got a feel for the markets. You can, zoom into the 1 or 5 minute charts if you want to, or you could just watch your day chart like I normally do and see how the price is moving. Look at the ticker, read the tape, if you will. And it's all pretty calm. It normally is before the FOMC, but I've just got a sense that there's no real danger ahead. I might be wrong, and probably complacency is exactly the wrong thing. Most of the time when you're trading, don't be complacent. But I do feel a little complacent today, and I think everything's holding up pretty well, even Bitcoin. I know we didn't make a lot of progress yesterday through that high, but we did make a new high, and I've circled it. It's so important. And we've got, go for it, Paul.
No, I mean, I was saying it was just, I mean, this is what I was thinking.
Yeah.
Bitcoin is, the last couple of times it's been giving us these tiny little higher highs, and I'm like, this is so frustrating. Yes. Could you just give me a rubber stamp on one of these, please?
Yeah. So, but yes, I mean, look at, this is a day chart. So we've got higher lows on the long term and higher highs. The third higher high being made yesterday, and also in this last week or so, we've got the same in the zoomed in view on the daily chart with higher highs and higher lows. And today's just starting off FOMC day. What's it going to do? So far, it's just trading, it's an inside day so far. But we did make a higher high. And the whole of yesterday, the market behaved very sort of timidly and placidly. And it was just trading around about that $90,000 level and dipped a little below it and regained it. The whole day, dipped below it, regained it. And then as the US market opened up, which it's just done now, 10 minutes ago, the market gained a bit and then fell back. We've seen that on about 3 or 4 days in a row now. And I expect we'll see the same. And the level that we're busy faffing around at is now 92,000. Yesterday, it was 90,000. So we've actually made $2,000 of progress in terms of the sort of base level that we're trying to form during the day ahead of the market open and the news that's coming up shortly. So I feel that everything's looking okay and quite sort of stable and calm. And maybe it's the calm before the storm. Maybe everyone's expecting JP to be kind today. I don't know. I don't know what's going on, but I don't think they are. No, or maybe they've already baked in his unkindness. I don't know.
No, I think you're right. I think they have, because we know there's clarity. We know there's issues with the data points. right? We know there's potential issues still with inflation. We know this. We know he knows this. We know the political situation. We know that there is a growing dissent with regard to the hawkish sort of tone. We know that. So I think what you've said is probably baked in. And I think that's when we don't necessarily have the crazy sort of movements. And I think the issue with Bitcoin is the way I look at it, right? I've just finished the 12 hours worth of Ken Burns' American Revolution documentary, the new one. I've just cracked through it at the weekend. There's a way to try and switch off. It's wonderful, but it's such a long time. But it explains so much about what's going on right now. And the interesting thing is that the reference for Bitcoin is that all these battle reenactments. And Bitcoin at the moment, I see as doing a little dance in front of the opposing forces, not really pushing their lines back, just doing a little dance saying, hey, look at me. And all I want them to do, and 96K, I think, represents this, is start shooting and have a go at the sellers, right? And it's not quite doing it yet, which is why in group today, I was like, until we start pushing these lines back and we start really attacking, and trying to really win this battle, you have to presume we're going to roll over a little bit and head back down to local support, 81, 83K. Not because it's a prediction, there's that word again. It's like, if the buyers cannot get past the first line, 96K, and they've got these tiny little higher highs, it shows that there's a problem there. So I really just want them to charge, and maybe they will do in a few hours. Maybe they will.
Maybe. Yeah, maybe. So I'm with you, Paul. I've been, I trade Bitcoin on 3 different levels. I have a cold wallet. I have a soft wallet, if that's an online wallet, Kraken type thing, a couple of those. And I've got a leveraged trading account. I trade them all completely differently. The only risk that I have in Bitcoin or in crypto in general is the leveraged trading account, because there's leverage employed. And when we get these massive moves, particularly these big sell-offs, if you've got any trades with any sort of leverage, you're going to be, I think the actual number was from the sell-off at the top, that first initial sell-off in October, if you were leveraged at 1.3 or more at the top and didn't get out, you would have been wiped out. And we know that happened because $20 billion worth of trading accounts got wiped out, and then another 80 billion thereafter in the subsequent weeks. So a lot of money. And so, I've been managing my leverage trades, trying to hedge and unhedge like a madman. And I'm now in a situation where I'm in a good place. I've got quite a lot of size. You can see where my positions are. I'm basically at break even at the moment, I think, just above. But I'm going to start hedging this very quickly if this price moves down. And I'm going to hedge it so early. And I said in the private group the other day, when you're going to, if you are a hedger, and there's nothing wrong with being a hedger, it's not a weak trader. I saw a comment on X saying hedgers are weak traders because they don't know how to pick the entry levels accurately, and so they just hedge. Hedge their bets. Hedge their bets. As a, there's a negative connotation to hedging one's bets, isn't there, Paul? In general, in life. But in trading,
I'm a planner, right? I'm a planner. I like planning for A, B, C, D, E, right? And I'm like, I don't consider that stupid. Might drive people crazy, might drive me crazy. But at the end of the day, it's like you're protecting your ass. I mean, this is the whole game, isn't it? I mean, if you want to jump into a crypto trade, with all your position and then just be able to cross your fingers, and okay, go for it. But that doesn't seem as smart to me as somebody like yourself who is putting it in robust risk management in whatever form that takes. Right? It doesn't make any sense. What a stupid thing to say.
Exactly. And it could be another form of risk management, as you mentioned. It doesn't have to be hedging. That's the way I choose to trade. And one of the reasons why I hedge is purely psychological, because when you put a hedge on, in other words, if I'm long on Bitcoin and it drops and I hedge the position, in other words, I get short, keeping my long position open. You can't do this in some countries like the US, for example. You could do it with 2 different trading accounts though. And a lot of people do in the US, for example. But the moment it drops down, I have to hedge. I think I've lost my train of thought. But basically what I'm trying to say is, if we drop down, I will hedge my entire position starting very early on. And I said, this is where I was. I said to the private group, if you're going to hedge, if that's the method that you choose to manage your risk, then do it early. Don't hedge late and exit your hedge early. Do it the other way around. Hedge super early. There's no downside to hedging. if you do it early and you lock in a very small loss. And you may as well eventually stop that loss out if you want to later on, or you could keep the hedge on and work the hedge like I try to do. But there's no downside apart from missing out on potential profits, but there's no downside in terms of loss on your account. And so hedge early and figure out what to do with it later. Don't hedge late when you're 30% down and you think, oh, I've got to hedge this trade because, you know, I might lose my account. By then it's way too late. So hedge early. And that's what I will do. And I've got a hedge level, I'll give it to you right now, where I will start taking off 20% at a time, hedging. In other words, I'll be 20% hedged, and then 40, and then 60, and then 80, and then entirely hedged if we need to be. And my first hedge level, and I'm just going to actually, we've been provided with a very nice pattern here, Paul. I don't know what you think of this, but we've got consecutive higher daily highs starting 4 days ago. And each one of those is an important level, because let's start with yesterday's candle. If we move down below yesterday's low, that will be very negative because we will have broken the higher high, higher low uptrend. And therefore, it's a great place to hedge. If we move down below the previous day's low, the same reason, I'll hedge there again. And the next day, I'll hedge there again. By the time we get down to 87,500-ish, I'll be 60% hedged. And my position will be roughly, protected. If we drop further, I'll be 80% hedged, and then 100. And then I'll be fully protected no matter what happens next. Of course, I'll miss out on the upside if I don't start unhedging sooner rather than later. But there's plenty of time to unhedge because the market doesn't move in one direction. It moves up, then it comes back, then it moves up, then it comes back. And there's lots of time. Time is not your scarcity in trading. Time is a plentiful resource. There's loads and loads of time to get into trades. You don't need to rush trades. You don't need to pick bottoms or pick tops. There are always opportunities to get into the market, and you should hedge early. So that's what I'll do on Bitcoin. We'll come back to that, I think. But I think, Paul, what I want to do in these sessions is to pick out midweek, it's a Wednesday, pick out the main plays that are going on that we've been trading in the private group and what people are interested in trading or maybe concerned about, like natural gas, for example, and then just cover those, cover some of the crypto stuff, and then leave it in their pipes to smoke, basically. So to cover the important things that we're trading and to set the scene for the market, and then folks can do with that what they want. So that's kind of my objective today. If you permit me, Paul, is that all right? If we can just...
No, we'll be the tobacco. That's fine.
All right. I'm going to spend 15 minutes or so just to quickly run through a couple of trades that we've got on and tell you what I'm doing with them. I think the most important one and the busiest one so far is natural gas. Now, we moved all the way up to the top of and I'd encourage you, I'm not going to repeat everything that I've said in previous videos every single week. And so you need to keep up with the videos, you need to watch. And if you can't be present during the live streams, at least watch them later. And you'll remember this channel that I talked about in the last live stream. And I talked about this on the Thursday, was it Thursday, last week's natural gas video too. And we've run up into this channel and collapsed back down through it on the third attempt to do the same thing. We talked about that channel. We've been selling at these highs. I try to get long at the trend line and the 20-period moving average, and I immediately hedge once it started moving down further. And so I've got a small hedge position on there, which is running at a small loss. But that's no problem. And then when we got down to the bottom, just a few hours ago, I bought literally at the bottom. If you're in the private group, many of you are, you'll remember this just about an hour ago, I think, just before this session began. We bought at $4.45, looking for this to bounce up into the hedge zone and the underside of this very neat trend line up to there, and take some profit on that long position from 445, unhedge the short position. We could do that now, but I'm not going to do it prematurely. We could do it now for profit, but I'm not going to do that now. I'm going to wait for this to ride up, unhedge it at break even, and then probably exit this long trade as well. And then having taken profit on the long one from down here in the order block where we got long this morning at the 200-period moving average to the penny virtually and right into the order block. A great entry. And this 4-hour candle has shot up like a banshee and gone berserk. So we got long at 445 and we're now trading at 460. And when we get to 465, that's where my hedge, I've removed the hedge already actually. We did that just straight after we got into the trade. It moved up so fast. The very next post I put up in the private group was, we're now unhedged. So I'm now long from 445 and long from 470 odd, 75 or something like that. Average price about 460. And we're at 460 now. So we're actually at break even. And if we move up into this zone to the underside of the trend line, I will exit this or hedge it, because I don't know what's going to happen next. I'm long of mind on natural gas, but we are very overextended. We've got the FOMC coming up, and we don't know, a dovish statement by Powell could force this price up along with all the other commodities and things like metals and precious metals and energy metals like uranium and lithium, and natural gas. So, but if we have like we think we might get, a dovish cut, that could drive natural gas further down. So I don't know what's going to happen, but I do know that I need to do something when we get to the underside of the trend line and protect my position ahead of the FOMC. Maybe we can get there before the meeting in a few hours' time. And that's at 8 o'clock Eastern, I think. What time is it, Paul? I think it's in about 4 hours' time. Is it 4 or 5 hours' time?
Let me double check.
But yes, or maybe it's 3. Anyway, 3 or 4 or 5 hours' time. We will know. But I hope that this will move back to the underside of the trend line before that event occurs, and that we can get out and take some profit and then decide what to do after the meeting. So that's natural gas. Please ask questions here if you've got further questions on natural gas. I'd love to get to them. But if you've been following in the private group, you'll know exactly what's going on, I hope, and you'll be very comfortable with the.
Yeah, we're looking at 2:30 p.m. Eastern time. That's American time, Eastern time for the press conference. So that's going to be a little bit later. Wait, which time zone are we all in?
Yeah, so it's 10 o'clock. So that's 4.5 hours time.
Yeah, that's it.
4.5 hours from here. All right, so that's FOMC and natural gas. Please, if you're not sure about natural gas, just to reiterate, these are the futures that I'm trading here. This is the 4-hour chart, and my overall feeling is that we're trading in a higher range. And if you remember what I said in the video on Thursday, that I think we might be at the top of the higher range. That might be around $5 or $5.50, and the bottom of the higher range might be as low as $3 or $3.75 or $4 or $4.25, all the quarter rounds. So we're aiming for $4.25 first. If we get down there, we're long at the moment. But when we get to the underside of the trend line, I think we might have a chance to sell into 425. That's down here, this first black line. And then I think on a breakdown, we'll probably get a big bounce, because that will be incredibly oversold by then. If that moves down there today or the next day, we'll be very, very oversold. We'll probably get a decent bounce out of there. So this won't go all the way down. And then at some stage, I think we'll have an attempt at getting down below there towards 375. I don't know. It's very tricky. Because we've got various factors working against. We've got warmer or mixed weather. We've got at very high prices, right at the top of a very, this is the highest we've been for about 2 years. So very high prices, very overbought on the technicals. But I'm bullish in mind on natural gas, and I think that we're moving into a higher range, that there's more demand, and it's one of those things that's going to stay quite strong. There's a bid under it, a general bid. But where that bid takes place, I don't know exactly. Is it 375? Is it $3, 350, or is it as high as $4? So are we trading in the $4 to $5 range now? I don't know. We'll find out soon enough.
You have any thoughts about because there was the UN climate release, which happens every 6 or so years, and there's a little bit of controversy about it in terms of the US and some of the countries wanting to water down the summary, which which of course is a very basic way of trying to turn a blind eye to the climate change. And do you see that as, obviously, so the administration obviously in the United States is very supportive of fossil fuels. Do you see this as also a factor in propping this price up, do you think?
Yeah, so natural gas, there are a couple of problems with it technically, in that it's difficult to transport. It's got to be, it's difficult to transport over water, special shipping and ports required. And it's difficult to transport by pipeline because pipelines leak, and it's not the methane and ethane and other volatiles that escape that are the main problem. It's the methane. Sorry, it's not the the combustibles. It's the methane it's not carbon dioxide and other combustibles. It's methane which escapes because it's a very small molecule, and it gets out of the pipe joints and gets into the atmosphere. It's much worse for the atmosphere than carbon dioxide in terms of greenhouse gases. So everyone knows this, but when it burns better, and it's more plentiful, and it's been seen as an interim energy source. That's probably accurate, actually. I think eventually we'll move away from burning. I was going to say, I shouldn't swear. We'll move away from burning stuff to extracting energy in a much more efficient manner from atoms and stuff like that. So I think that's the way.
Are you talking about hydrogen?
Yeah. Well, hydrogen and nuclear. So I think we're going hydrogen and nuclear, and it's clean and it's atomic, and it's not this brute force digging up fossils from the ground, shoving it into a furnace and burning it to get energy out of it. It's very old-fashioned. So I think natural gas is in that category too, but it's a little bit better, but it does leak methane. And there's a lot of people don't like it at all. A lot of people are adamant about natural gas being very, very bad for the environment.
Well, you're right about the transport side of things, because obviously when all of the issue with the war in Europe kicked off, a lot of the companies, Germany as an example, if I remember this correctly, was like, this is great. We're going to try and move away from Russian dependence, all this kind of stuff. And then they suddenly realized, well, we need to build all of these highly technical ports to transport it. And it's like, that's going to take a while.
Yes.
So yeah,
and they are difficult, and they break down a lot, as you'll know if you trade natural gas. The Henry Hub breaks down all the time, but they are building new ones. So look, the demand for natural gas is not going to stop, and there's no immediate resource to replace it. Green energy in all its forms is not sufficient. Wind farms kill whales and birds. I don't like them. And
so you don't like birds or wind farms?
I don't like birds. No, I love wind farms. I hate birds. No, the other way around. I like birds. But yeah, so interesting.
Here's a question about natural gas from ECAL, I think. So for natural gas.
Yeah. So, well, it's an easy answer. So on all my charts, on every single instrument, on any time frame that you'll see, that whether it's 4 hours a week, daily, or even a 15-minute or 5-minute chart, I've got the same moving averages. And that's starting at the top here. They're all lined up below us here on natural gas. The green one is the 20-period simple moving average. Yeah. Old-fashioned, old school. A dinosaur. Call me a dinosaur. I don't like EMAs.
I'm not an exponential guy either, right? I'm an SMA guy myself, so no judgment there.
yeah, good. So for me, look, they all have a role. They all do the same thing, really. And I don't use them for crossovers or for MACD studies or anything like that. I just use them as support and resistance and trend direction generally. And so I've got the 20 SMA, the 50 SMA, that's the red one, the 100 SMA, that's the gray one at the bottom, and the 200 SMA, that's the purple one at the bottom here too. And the way I use them, I don't care which way they're crossed, whether we've got a golden cross, a death cross, any other sort of cross. It doesn't even cross my mind to look at them, in fact. But what I do use them for is trend direction. As long as we're above, for example, on natural gas on the day chart, and it's different for each time frame when you talk about trend direction, because a 4-hour chart, 20-period moving average on a 4-hour chart is a different beast to a 4-hour on a day chart. But on a day chart, it's the basic trend direction indicator. You can see we've broken down through it after being above it for a month, maybe 2 months now. We've broken down through the 20, which was running along the underside of the trend line. And the 20 period often does run underneath trend lines. One of the ways you can tell if your trend line's any good, in fact, is if it runs along with the 20-period moving average on the day chart. That's the right sort of angle. Sometimes you might be tempted to draw your trend lines too sharp, too acute, or too obtuse, I think is the word, or blunt, shallow. If a good guideline is for a good, decent trend on a daily chart on any instrument, natural gas included, is the 20 period. And so I use them as trend direction. The 50 is the medium term, 200 is the long term, roughly speaking. and then also use them as support and resistance levels, and you'll find that the price will often bounce off any of these 4 moving averages as it moves along in the direction that it's trading. So yeah, that's the answer to those questions, I think. Well, that question. There was another question, actually quite a long one, that I flashed up earlier.
Yeah, I was going back to
private group.
Jump into that.
Yeah, so Ecal, thank you for the question. The question is, the private group, does James post updates in real time or thoughts, or is it a scheduled basis? No, in real time, Ecal. So both Paul and I put up our trades in the private group in real time. I'm a more active trader on stocks, commodities, everything else, and a bit of crypto. And Paul is our crypto expert. So Paul puts up, real-time crypto analyses, and I put up real-time trade alerts for every other instrument, including Bitcoin mostly. So yeah, real-time, including exits, entries, adjustments, and it's 24/7 basically. It doesn't mean I'm there all the time or Paul's there all the time, but if there's a trade on
but James, what James won't tell you, he's just being modest. He has this thing where he attaches to his head when he sleeps, and he just mutters entry points, and using an API and a bot, it goes straight to Slack into the group channel. So it's one of the most impressive things, because James makes money in his sleep, right?
yes, yeah, that's it, absolutely. Yeah, I wish I did. I actually reminded me of when I was at university in my first year in math class. In fact, I remember this very clearly. I remember the lecture. I used to fall asleep. I used to sit in the back row and fall asleep in Math 101, and but I used to kind of listen to what he was saying. I for some reason have this ability to actually be asleep and listen to the lecture and to understand and remember what he said. So he would occasionally, it was a bit of a joke, he would throw the blackboard duster at me. In those days we had blackboards, or a bit of chalk or a cloth or something, throw it at me, wake me up and say in a different language. And I went to university, I had to learn a different language, not my native language, to study it. So in this Afrikaans language, he said, "Mr. De Wet, could you tell me what we were talking about, the square root of this," or whatever he was talking about. And I gave him the perfect answer, having immediately just woken up like that. And we used to do this like once a week in math class. It was a bit of a joke. So yes, I can do some things in my sleep, Paul.
You've just given me an idea, because this is the whole kind of put a tape on under your pillow sort of learning approach, which some people do, because it kind of taps into your subconscious and it just kind of oozes in, right? But maybe, because we're preparing like a crypto masterclass series, maybe we can forget the videos, forget any of that. We just convert it into just an audio of me just, so support and resistance levels are, and just do it like that, right? And maybe that's the new thing. Maybe we can start a new trend, right? Learn to trade in your sleep. There you go. That's a selling point, right?
Yes. Yeah, with some soothing, Gaia type music going along.
And even if the price action heads lower, just make sure you have a stop loss in place. Something like that.
Yes, like David Attenborough, something like that. Yeah. Anyway, but that's natural gas, folks. So I think we're going to see what happens at the underside of the trend line here. I'm thinking we could get down to 425, or maybe at a stretch 475, which is a point of control on the long-term natural gas. As I said, please ask questions if you've got any further on that. While we're on energies, quickly, I'm really just going to go through some of the things that I'm busy looking at closely today, and we'll ignore some of the other things. This is oil moving down. As I said, this is going to get messier and messier as we approach $50. We haven't even got there in the last number of years. We got down as low as 55. I think we'll try and get down to 50. We're short from $61. We're trading at 57.80 now. And I think we'll eventually break down through here. It's just going to be a slow, messy process. And you might not want to be trading this, actually. I think it's going to get less, there's just going to be less alpha available here as we get lower and lower. And you'll see the options market and all of that will start swinging around. And we'll start seeing a bit more upside. But for now, I think we can still eke out a move down to $50 and maybe 48. And then probably a very sharp bounce out of that level, back up to about 60 or 70, something like that. That's oil and gas. And then gold and silver. A lot of people asking me, where is gold going next? And I think, as I said earlier when we started the session, one of the things that's affected dramatically by interest rates and thoughts about interest rate cuts next year and in the future is gold and silver, metals. And the investment metals, they have no yield, and so they require low interest rates to be really interesting. What's interesting about this gold rally is that it took place, and gold bears beware. This rally took place during one of the highest and longest sustained and most rapidly gained high interest rates in US history. And during that period, albeit rather slowly, but until this last push up, it started off slowly and started to accelerate. But this all happened, 2022, 23, 24, and 25, when we had very high interest rates, a lot of uncertainty in the market, a lot of war going on, which obviously helped gold, but no help in terms of interest rates. So if interest rates start coming down further, this could drive gold up quite dramatically. However, I think that's probably what everyone thinks, and therefore it's less likely to happen. And I think we'll probably see gold come back down to this first red trend line at about 3,750. And then I think with a bit of luck, we could get down to 3.5, the top of the breakout triangle that we have not retested yet. And as Paul would like to draw on his charts, he's going to draw his squiggle. He would draw, and I hope you agree with me, Paul. Your squiggle would look something like this. You'd be saying, well, you've got to wait for the retest, and then wait for it to get back down there and buy it at the bottom there. It's the same with gold. All markets are the same. This is a weekly chart, so it looks pretty simple, but all markets do the same thing. And even though it's a very long way down, we haven't done it yet. We didn't even try on the breakout to even test a little bit. And so I think that's the most likely scenario. And if you've been trading gold for a long time, you'll find that most people get trapped at the top after a big bull run, and they think it's going to carry on going forever. And eventually they find out, that it just doesn't do that.
Yeah,
I think I've lost some.
The thing is, I think sometimes, especially in this world of social media and hot takes and quick panic, Bitcoin makes a move up and everyone says it's going to 1 million. Bitcoin takes a Satoshi down, and then everything is, it's a bit silly, because really it's like, so gold starts, let's just say hypothetically gold starts heading downwards towards that trend line. People are going to be like, gold's done, blah, blah, blah. And I'm like, no, it's like I don't want to go on to I don't want to go about the American Revolution. It's just in my mind, right? But I'm just like, if you think about, you're making a strategic retreat to get more supplies, and then you come back, right?
Yeah, absolutely. Have I lost you there, Paul?
Kind of price action which goes up and down. It's natural, it's organic, it's part of the process. It's nothing to be afraid of or scared of. And I think that's the most important thing. So when everyone else is running scared, it's an opportunity for people, and that's the thing. So not something going down isn't necessarily a bad thing, right? And that's the most important. People need to, and I think experienced traders obviously know this. Well, duh. But many people who are casual traders, they will just see an asset heading downwards and they'll be panic, and that's it. They'll be over. But then the opportunity is lost. And I think that's the most important thing to recognize, because you can't, what comes up must come down, right? You can't sustain such a huge bullish fervor all of the time, right? You've got to come back and have a bit of a reset, set your camp, sit by the campfire, get warm a little bit, and then go out again, right? That's what it needs to be. So it's, I think it makes perfect sense. But nothing to panic about, right? It doesn't change what gold is, right? I think that's the most important thing. So,
no, absolutely, absolutely, yeah, absolutely. So I'm betting on this really, as literally betting on it, because I've got short positions here, and I'm betting on a move down to that red trend line and possibly down to the top of the triangle. I think that's quite a stretch to get down there. I think it'll be not easy, but you never know. I mean, it's also where the 200 period moving average is coming up from underneath, but that's now moved up above there. And actually, by the time we get to the red trend line, the 200 will probably be there as well. So that looks more like probably where it's going to stop. And we may not even get below, some of this stuff at the top here. It might just be a bull flag. And also, if you're short, the worst case scenario might be a retest of the trend line from the underneath, something like that, which could, be quite dramatic. So still be bearish. Not really. I mean, now it's getting a bit of a stretch. it's a bit of a stretch, but you know what I mean. So I don't know. FOMC is coming up. If it is a dovish cut, which probably won't be, but if it is, we could see gold moving through the roof and going up pretty dramatically. But if it's a what's the other word? A hawkish cut. It could propel gold down very quickly and very, very sharply. We've broken the major first short-term trend line, and we're still below it. We'll start to draw some further trend lines later, once we probably from that the triangle breakout to these lows. We could probably do that now, actually. Let's put a trend line in from there, something like that. So we're kind of teetering on the brink of that trend line, just on the edge of it right now. So it's looking precarious. And we are short. So if it breaks that trend line and heads down, we'll be in the money. If it doesn't, we'll have to hedge. But at the same time, I'm also long on silver. We did get out of our silver longs from $50 at $61.50-ish, thereabouts, up at the top here. But I didn't get out of my gold shorts. And looking at the way these markets have traded today, heading into the FOMC, I decided that I'm not 100% convinced that the gold shorts are going to work out today. Or in the long term, or medium term rather, and therefore I've just added another long back onto my silver position. So we got in at 50, got out at 61.5, and I got back in at 61.5. So I'm now back long on silver and short on gold, and it's so interesting. This is probably the 13th time we've done it now, and we've been short on gold, long on silver, and we've made profit on every single occasion. And it looks like we may do that again now. Silver might move up, gold might move down. Stranger things have happened. So I'm short on gold, long on silver, for those of you who are interested. And of course, you'll know that in the private group. And then I'm also long on the NASDAQ. We just took 2 positions, 10% only. And this is an asymmetrical bet for me, because a 10% very small position with a very large upside. I think if we do get big bids under this after the FOMC, if we don't get, or if there is a hawkish cut, it might just be completely ignored by people who know that Jerome Powell's not going to be around for long, and he may not have any say at all in what goes on next year in terms of rates, considering that he's one of many in the Fed. So this is the NASDAQ. I've just taken a bet on this one, asymmetrical. I think there's a large upside potential and a fairly restrained downside potential. But if we do get a dip into the moving averages, the 20 and the 50, as I said to you before, in response to that question about moving averages, that will be a support zone because they're in confluence. They're on top of each other. Let me try and reset the scale. There's the 20 and the 50. The green is the 20, the red is the 50, and they're touching each other right in confluence, forming a very strong support level should we dip down into that region. So I will be adding more size on over there, another 10%, looking for the bounce out. And if we break and hold below there, I'll probably hedge the position. But my line in the sand for the NASDAQ, where I know that we are probably not going to be long any further, and that we may now be topping and entering a bear market, is this level at the bottom here. This double bottom, it's not quite a double bottom because this low is lower than the previous one. On the S&P, it's a perfect double bottom. But the level here, and I'll read it out if you want, 23,800, line in the sand. If we break and close below there, I'm going to flip to bearish on the NASDAQ. And the same on the S&P. If we break and close below that double bottom and that support zone and the big red line, I will flip to bearish in my thinking on the S&P and seek to get short in general. Doesn't mean I won't ever be long, but it means that my bias will be short. But for now, unless we break and close below those levels on the S&P, the NASDAQ, I'll be looking to continue to buy. And that's my story on stocks. And Bitcoin, I think we're holding this 92 level like we hold the $90,000 level yesterday. I'm a bit more of a gung-ho trader than you are, Paul, as you will know. But I'm quick to enter trades, but I'm very quick to hedge them if I have to. And so I'm remaining long on Bitcoin. There are my 3 entry positions, taken some time back. I've not added more, but I will add some more if I get the chance on a break and a close above this level at 94,000, the same level that you're looking at, Paul. And I'll try and add another 10% on there, looking for a move further up. Of course, we've got loads of traffic above us. But what I do like about Bitcoin, and I'd like to hear your thoughts on this channel, Paul, because I've stolen it from you. we still seem to be holding it. You don't have the top line of the channel, but you've got the trend line on your charts, I think. And we did hold it actually almost perfectly. And while we're talking about holding, if we look at the Bitcoin gold chart, it's also holding most beautifully. And this is the weekly chart on Bitcoin gold with a 300-week moving average. I don't know where this comes from, Paul. Maybe you know, but a lot of people look at 300-week. I didn't even know it was a thing. But there you go, it is a thing. We've tried it twice before, and we're trying it currently again. And I think we're going to bounce out of here. And this is a weekly chart, beautiful tweezer bottom, and holding up just beautifully off that 300-period moving average. And there's also a trend line there as well, which I haven't got drawn in. We looked at this chart the other day. Hey, oh, Paul's gone. All right, well, he's gone. Okay, well, that's all right. I'm here. Paul seems to have dropped off. All right, and he'll be back, I'm sure. I think he's, I saw his feed was stuttering a little bit earlier on, so he's probably just running into some internet connection problems. So we'll wait for him to come back. Or he might not come back before we finish, because we're going to finish fairly soon. Folks, if you have any further questions, please type them up. But I think we've covered most of the things that we're looking at in the private group. And I wanted to give that précis of what that might happen in the Fed, what the interest rates might do, and how the market might react. I've just removed Paul. If he comes back, I'll let him back in to the scene. So yeah, so it's midday update, folks. Really, I just wanted to give you the main themes of what we're looking at, what's moving. Let's get off this Bitcoin chart and have a look at some of the things that we are busy trading. So natural gas bouncing up nicely, both on the futures and the spot. I'm hoping we can get up to the trend line so we can balance, take profit, and get out of our position before the FOMC in about 4 hours time now. And Bitcoin holding well. And I think actually it's holding this level. And the fact that we made, I circled it, as I said earlier, the fact that we've actually already made a break through that level and a new recent high, I think that's all very good for Bitcoin. And the way it's trading today, let's just zoom into the 15-minute chart. Pretty stable. I like the way this is trading. Is that you back again, Paul?
So sorry.
There you are. All right. Pretty stable. I was just saying, Paul, I like the way this has been trading. We looked at the Bitcoin gold chart when you dropped off. I guess you're having some internet problems there. This is today's trading on Bitcoin after having made that high there. That's that. That is the high, the new local high. That blob's a bit big. That's what we pointed out earlier on the day chart. And since then, I think it's behaving rather timidly and quite well. Holding, interestingly, on the 15-minute chart, there's the 200-period moving average. And that ties in what we were saying earlier, that you can use the same moving averages on various charts. And you can see how we've respected the 200 here on the 15-minute chart. A completely different time frame, and yet these moving averages are respected on these shorter time frames. But I think that's looking good.
I think there's
Oh, sorry, Paul, before you, sorry, I just wanted to, while I've got it in mind, because I forget things very easily. This is what happened yesterday, right? We dropped down, made a little blip midday, consolidated around the 200, and then rallied up. Today we're doing exactly it. Drop down. Exactly. The drop down, the little blip up like yesterday, and consolidating around the 200. And if we do what we did yesterday, I'm expecting we'll see another stovepipe eruption like we've got there yesterday, and that will take us up to a similar sort of height, I suppose. That would be about 90 to about 94. So $4,000 from 91 could take us up to 96, 91 and a half, 92 up to 96. And that would be the next point of control or resistance that we need to get through, that we've already pre-identified as an important level.
No, I think there is a base to launch from. We've got the 3-day 200 MA supporting the price action approximately around where 89K is. So there is a narrative to it. But as I was saying in group, that it's a game of psychology with the traders, right? It's a game of psychology with that. And I'll put my Bitcoin chart up while we're talking. And the reason why in group I said that it's very important to, that's not the one I want. It's very important to get above 96, right? There's resistance, because then it's not really, it gives us the bulls a clearer signal to charge, or rather a clearer signal to come in for a long at a slightly higher price point than what is local support at around 82 to 81. And that's what because I completely agree with everything you've said, but we know that Bitcoin ignores these triangles, right, on the higher timeframes, it's like shaving cream. And what I wanted to see was a definitive move above 96, maybe tapping 98, because that's going to bring more people into the market. At this point, if you look at it like on this is just one perspective, of course, right? So compare like your chart with mine as well. But, you know, if we do come back down to the 3-day 200 MA and 89K, you know, that we are then stuck below some resistance again. And if we don't quite have the reinforcements we wanted because they're not finding that higher high particularly appealing, then it does, the local support retrace is still a bit of a threat. And I think that's and again, as you said about the start, about a cautious trader, right? I mean, this is because it's such a volatile asset. This is the way I look at it. And when we have strong moves, which shakes the bones of sellers, then that's when I'm more prepared to come in on a limb. And I just feel if I look at that, we have an uptrend, but we're just grinding it out. It's technical, an uptrend, but it's not sort of like, yay, we're going to the moon time. It's kind of like, well, we need to see what the next move is to see if we're going to have even more bullish confirmation. And if we do get that next move after FOMC, which I think based on what you said and based on your chart is a possibility, and then we get that rubber stamped higher high above we start spooking the sellers, and then we have a battle on our hands which we can potentially win. And it all goes back to that thing about like there's an expected narrative at the moment that Bitcoin will, if I just change charts, if I just put it on let's just find the right one. If we look at the idea of coming back up to 106K, now that would just be a bearish retest of a previous range for Bitcoin. I'm just going to find the chart to highlight it. I don't think it's going to come up because that's just, you know, that's the way it goes. But the idea is that let's just see if I can quickly find it. Here we go. This is it. So if you look at this chart on the right, on the current, we're just in the process of essentially retesting the previous range, right? And if we come up to 106, right, that is just a retest of this upper trading range. And then that would be the presumption, and then we'll continue down from there, right? So we still have plenty of upside potential, but this is the thing. If we arrive at 106K, putting in that bearish retest of the previous range before we enter, say, I don't know, a bear market, if the macroeconomic conditions have improved when we do that, bulls have a real chance of blasting above it and then changing the narrative, right? So every one of these is an opportunity. And I think that until we see something like that, we have to be very, very cautious as a result. So I am a little bit of a Scrooge with regard to Bitcoin at the moment, but I wouldn't be if we had broken above 96. So I think this is the way traders probably need to perceive the market, in terms of like every higher high is not created equal, every higher low is not created equal. And, you know, we've had a long downtrend. This is a natural bounce, and we have to look at it with skepticism until we see that the bulls have a chance of winning the next battle. And hopefully, fingers crossed for my long trading friends, we may see that in the next couple of days. And if we do, fantastic. But this is why you want to wait and see an FOMC week, right? Because if you're committing to a position yesterday, right, you're probably going to regret it on Thursday. Right? And I think this is the whole game. But yeah, it's interesting, and I hope Bitcoin does that. It'd be very good for Bitcoin to do that.
Yeah,
sure.
Yeah, I've just noticed your name, Paul. The pony. My eyesight's a bit poor, so I'm reading it on my tablet. First of all, I thought it said the pom, but I see it's the pony.
Just because you described yourself as a hedgehog, which I presume is because of potentially your cool hairstyle, and I just thought, let's go with it.
No, it's because of hedging. I was called that by someone in the private group last year. I got that name from, I think it was TC, who said the hedgehog, and he drew a picture. He made an AI of the hedgehog.
I think it works well, because I think your hair is a little bit like a hedgehog, right? I used to, if I cut my hair like that, it would be exactly the same, right? Because I have kind of, you know, I have hair like that. But I just thought it was funny. But you know, I meant to change it to the crypto Grinch today, but I forgot. I'll do it for tomorrow.
Yeah, crypto Grinch. Yeah. Okay, folks. I think we're going to finish off here because we've been going almost an hour, or an hour. But I actually wanted to, maybe got a few things to cover quickly, Paul, as well. But I wanted to just say thank you to everyone who is here. A heartfelt thank you for being part of the private group and or being part of the YouTube membership. We don't take it for granted, and your support really helps this channel grow. and helps us to produce more and more quality content and media and information for you. It's not easy to run this show, I promise you. There are costs involved. You think running a YouTube channel is pretty simple. All you need is a computer and a camera. It's not true. You need lots of different stuff. And so your support really helps us to do better and better and to produce more and better material. So thank you. That's all I wanted to say. And if you're not part of the private group, and just following up from that question from Ichal. Yeah, so, and all of the trades that I personally take, every single trade that I take with real money, real Bitcoin, real cash, I take them live, and I show you my trades precisely. I don't take trades outside the private group and not tell you, and I don't take trades inside the private group and then pretend that I didn't take them. Every single trade is recorded, and every single trade is tracked, monitored, followed up, and exited at the appropriate time, either for a win most of the time, or for a loss sometimes, or for a hedge on occasion. So everything is detailed in the private group. And if you want to get more than you get here on the YouTube channel, and the midweek videos and the rest of the stuff we do here on YouTube, if you'd really like to get into the nitty gritty of it, come and join us at the private group.
Yeah,
it's not expensive, and it's great. Yeah,
I mean, which we're obviously in a bit of a transition at the moment. And just to answer this question, no, I don't anymore. Consider this my base. Consider Arcis my base. So yeah, like and subscribe. Yeah, look, so we're obviously we've got many things which are going on, and 101 many things going on, and people working behind the scenes. But what we are obviously trying to do is, we are trying to broaden the community. We're trying to serve more masters, more bases with crypto and so forth. We're trying to make it work on multiple levels. Now, you'll notice that some of the membership content, and obviously this is a members only stream, and for the private group, is also starting to flesh out a little bit. And we're trying to get the right balance. So James, obviously, you are releasing lots of great content, but also some member stuff, throughout the week. I'm trying to do the same. And so if you look at like Crypto Pulse as one example, right? So I think we're going to settle into just 2 videos per week for members on YouTube. And the idea with that is that when we release Bitcoin update, as an example, we're going to then have a Crypto Pulse with an altcoin. So there is something to trade off that. And then likewise, when we get to the back end of the week for altcoin gems on Friday, and that's 4 days since we've had Bitcoin update, we then have a Crypto Pulse for members, which just quickly touches base with Bitcoin. And then if you want 5 of those a week every day, that's what's going to be available in the private group. So that's the general idea. And we're just trying to figure it all out. But we're just trying to make it so if you are a casual YouTube viewer, you've got great content, right? And if you are a simple supporter, which is just paying a couple of bucks, you get access to these live streams and some content early. And then, of course, we're trying to then make sure if you're a fan, a higher paying member, then you've got some additional content. And then if you do then progress to the private group, you then get the full shebang. And we're just trying to make it so it's all good for you in whatever way you want to access that content, and just make sure it's of the best possible quality. And you'll notice probably, James, with your content as well, with my content, we're always trying to change things up, move things forward, find a good formula to keep things working. The same with these live streams. So, we are very appreciative for everyone, and certainly for welcoming me on board as well, because I'm not James.
Yeah, but I just want to comment on that, Paul. And it's a good question. Both Paul and I get frequently requested by other companies to do work for them in an analysis or presenting. I did some work actually both of us did some work for Ola Prime. I was the editor on the Ola Prime channel, not really a trader, but trying to help them with their channel in as much as I could. So we get approached by people all the time to do extra work. That's very difficult for people to find good traders around. And so we're very fortunate to have Paul, because he could be doing his own thing. He's got his own channel and students, and he's been approached by other people all the time. And he's chosen to make ArcisFX his home. Thank you very much, Paul. Appreciate that.
I mean, thank you for that. I mean, it's a bit of a no-brainer. I mean, we don't need to go into any of the details, right? But you know, we've both worked for Isle of Prime, we've both worked for other people, and we've realized that it's not all is created equal. So, you know, so it's good to find a functional place. Let's just put it that way, right? A good, happy, functional place.
Yeah, that's for sure.
Great to be here. I'm very privileged.
Yeah, awesome. Okay, folks, that's it from me. Paul, have you got anything else you'd like to chuck in at the end?
Yeah, I'll be back.
Do you want to play the? I was going to say, do you want to play the marketing video for the private group? But I suppose you could if you wanted to.
Yeah, we can end on that. Maybe let's do that. Let's do that. But yeah, just before, we'll play that at the end, and we'll say bye in a second, and you'll hear James in sultry tones just going through about what the private group's about. But yeah, so James, you're back with a tech video tomorrow, right? Is that correct?
Yeah, tech video tomorrow. I'll be covering NatGAS and all the other major markets, and of course it'll be post FOMC and post the fallout, so we'll know exactly what Jerome. There probably will be a rate cut. We'll know what Jerome Powell said afterwards and how he responded to the questions and how the market responded to that whole bag of info and stuff. So it'll be a good session tomorrow, but I will cover natural gas that's moving and things like gold, silver, and of course the stock markets. And we'll also look at Forex, some of the plays that we got on the Aussie, looking to get long on the Aussie against the US dollar, and the dollar yen, what's happening with the carry trade, and are there chances there to make some money? So we'll look at all of that tomorrow.
And then following that, depending on when you watch it, of course, but presuming you try and grab it straight away when it's released early in the day, we'll do a dedicated crypto live stream tomorrow as well, later in the day, so we can look at the impact on the crypto markets. And then, of course, heading into the weekend, we'll have altcoin gems on Friday with some good setups to trade. So yeah, we've got a nice full pack. And then, of course, you'll be back again on Sunday, right? So it's a nice
Sunday live, Sunday night live.
Sunday night live.
Sunday night.
All right. Well, we'll play us out with the private group promo, but thanks, James, so much for having me.
Okay. Thank you very much. Thanks, everyone. Thanks, Paul. Take care. Hi there, I'm James. I'm the founder of ArcisFX. I'd like to personally invite you to join our 24/7 trading group. This is built for traders who want an edge. Inside, you'll get access to live calls on Forex, commodities, crypto, energies, and metals, along with exclusive daily analysis designed to unlock your trading potential. And this in both traditional and now in digital markets. I'm talking Bitcoin, crypto, altcoins, and tethered currencies. You'll gain early access to insider news, real-time updates, real-time support, and premium educational content. If you want to sharpen your skills and boost your success rate, then join me and Paul in this community. This is a fast-growing community of traders who are now writing their own success stories. So don't wait. Join up now. Your edge starts right here.